Speaking of FedEx, its dire outlook putting the spotlight back on economic concerns around the globe. FedEx CEO Fred Smith said on the conference call, and we quote, "Fundamentally, what's happening is that exports around the world have contracted, and the policy choices in Europe, the U.S., and China are having an effect on global trade." I hear another fiscal cliff comment there.
Yeah, absolutely. So how do you play this warning to your financial advantage? Let's ask Keith Springer of Springer Financial Advisors and David Kudla of Mainstay Capital Management. Keith, you say short FedEx and UPS to look for cheaper alternatives. What are they? Are you shorting them?
The cheaper alternatives are definitely going to be the cheaper, the land-based. You're going to go to the railroads, CSX, Union Pacific. You can go to the trucking companies. J.B. Hunt would do much better, but we've got to be very, very careful with this because this could be, we know that negative surprises are like cockroaches. They keep coming back. And if it's just simply a slight growth restriction from 2.4 to 2.3, like you said, or 3% to 2.7, that's not so bad, and those other alternatives will do much better. What I'm worried about is this a precursor to something much larger, a major slowdown? That's when you would want to short these two stocks because the whole economy would be affected.
Yeah, that's a critical industry for the whole economy. We obviously know that. David, you see pockets of opportunity outside of shipping, like what? Technology or home building. Why do they benefit if Fred Smith is right that the global economy is slowing down, though?
Well, if we look at what areas are attractive, and certainly FedEx is a bellwether as a global shipper for the global economic activity. But the insight or the guidance is in what is happening in global economic activity. We know we have a slowdown in China. We have a recession in Europe that could get worse. So global companies are being adversely impacted by that. So what we want to do, we want to keep our money in the U.S. We like the U.S. home builders in that regard. Have been bouncing along the bottom for years. We got good data today for the National Association of Home Builders. We continue to get positive data. We think there's a long secular move in home builders. And if we want a global company, we'd rather look at something like technology names. I've talked a lot about Apple with you guys over the last 2 years. Yeah, everybody has, right? And it passed another milestone today. But that's
and
a global innovator.
And you're still buying it at 702 a share?
Absolutely, and that's a global innovator that's not held captive to the global economic activity and energy prices like a FedEx.
All right. David, Keith, good to see you both. Thank you for joining us and your thoughts on investments today.
Yeah, translation, everybody buys their stuff anyways.
Yeah, they do.